and thank you for joining this panel. This is the last one of the morning. We're gonna have more this afternoon. So I'm really glad you guys are all here. Thank you, Greg. Thank you. Can I call you Guru?
Yeah, sure. That's
Guru.
fine.
Okay. And thank you, Graham. Is that how you say it?
Yeah, close enough.
Okay, good. Today we're going to be talking about DeFi and the future of investing, decentralized investment platforms and DAOs. Today we're going to be talking about DeFi and the okay. So please introduce yourself and tell us why you're in Web3. Okay.
Who wants to start?
So please introduce yourself and tell us why
Probably I can go.
in Web3. Okay, go.
Okay. So I'm a co-founder and CEO of bcube.ai. We empower crypto traders to win in any market conditions by providing an institutional grade AI-driven platform. And I'm in Web3 because I believe in DeFi specifically. And DeFi is the future, as we know. And the DAOs and all these great things that's happening in this industry is very fascinating and which has a lot to give to humanity, as I can see. So it gives your rights back in your hands, and we have seen enough of all the things that was happening in the past which was not really working properly, and I think blockchain and Web3 is going to fix that.
Thank you, Greg. We can't hear you, Greg.
Apologies, I muted myself.
No
Hi,
worries.
I'm Greg Chu, CEO and founder of QPQ. We're building the infrastructure to make everything that we talk about in the context of Web3 possible. That's scalable, interoperable, high speed throughputs that can really deliver the potential that we think exists in Web3, and going beyond that into bringing real world assets on chain as complete assets, and evolving through to what I would call the programmatic economy. The reason I'm in Web3 is very simple. I think that we are missing the vast majority of the world's population from the economic participation that drives everything forward. I think the world is a bigger place than it is today. I think that we probably exclude something in the region of 80 to 90% of people around the world from real economic participation. And if we can create the sort of distributed digital economic framework that Web3 promises, that should actually invite everybody into that world, or at least give them the potential to be part of the global economy.
Great, well said.
Great. Well, first of all, you guys
All yours.
have done a great job with the event so far. Super organized.
Thank you.
So I'm Graham. I'm the founder of Run the Ship, and at Run, we're enabling the next wave of investors through investing DAOs. And what I mean by that is we essentially create homophily and break down the barriers of becoming a accredited investor, let's say. And we allow investors to build investment clubs. And pretty much it's axiomatic in terms of like Web3, what you can invest in, but we can also invest in regular equity with startups. And why I'm building in this space? Well, I worked in numerous startups, especially ones that received quite a lot of funding. And so I looked at the whole space of funding from first principles, and the barriers to accreditation are just way too high. If you know what they are, it's 200K USD income that you need to have for 2 years. It's 1 million net assets. There's a license, and there's only actually 7% of people who are accredited investors in the US, for example. So I'm building really towards this, and through Web3 and building investing DAOs, we believe that we can break down those walls.
Yes, definitely. And I think if we go international all around the world, then you have less barriers too, because everyone they don't have to be accredited investors like in the US. So
Right.
so I have put some questions, but feel free to share what you want. How do you guys feel like the decentralization investment platform differ from traditional investment? And what benefit do they offer, like to the market?
I think this is something that is a bit of a bugbear of mine, because I was actually involved with a nascent, what would have been a crowdfunding platform. What in the States they called a 506c platform, back in 2017. And there was a lot of talk about how these platforms would allow deal flow to go up on their platforms, and people could just come find it, see it, deal with it, get on board. But actually, it's not really true, because you end up with this silo problem where you've got people who are onboarded as a client and can see that deal flow. You've got clients who are onboarded with that investment bank or crowdfunding platform as the people seeking funding. And actually, it's a double silo. So when people talk about the potential of DeFi to step into this, we need to start looking at some of those infrastructural issues, but also to start being really transparent about what the costs are. Because when the STOs first came out, people were saying that they were going to cost less than traditional methods of raising capital. Actually, that's not true. The initial deals actually cost more to start. The real attraction is actually in the long tail cost. And there's a company called Clearglass who looked at this, and they estimated that the drag on performance for funds, for all the administration that a distributed ledger technology-based approach could at least address a lot of, if not solve, was something in the region of 30 to 40% drag on performance. That's very significant if you're an investor. Compound that year on year on year.
Great. Guru?
Compound that year on year on.
I agree with what Greg said, but I have two concerns about when we speak about DeFi investing and DAOs, which is about regulations. Because SEC quite recently said that DAOs are nothing but unregistered corporations. So I think like more regulatory clarification will be necessary for this space to grow, because we will see more and more people getting scared of the regulation. And because of this whole environment of fear, I think innovation can take a backstage. So there are certain jurisdictions. I mean, like now all the crypto guys in Dubai, and many of them in Europe, like they go to France, like which is having very good regulations, at least for European standards, because even our company is based in France. But whether it's completely friendly or whether we are in a completely in a green zone, I don't say that one. We are a bit in a gray zone now. So I think more and more regulatory clarification will be necessary and needed for this space to grow. And also DeFi as a space is so far like is having a kind of yields which is not very realistic. I mean, like real yields, because most of the yields that we see on the platform is coming from APR returns or any other kind of, the tokens which is created out of thin air. And these kind of payments of interest for the stakers or any people who are hodling the token, I don't think that is sustainable. And that is why, like we at BCube, like we are focusing more on giving the real yield, which means like the real profits being made, and from the profits, like we are giving the returns to like the token holders. But again, like one more question comes, whether the token is security in nature. Then it can be if you call it as a dividend, but there are different ways to do it, and I think then it will become far more attractive to people. Because what I believe is, as I said, the real yields, and there are many ways to achieve that. And even if you see on any kind of DeFi protocols, the interest rate is normally between 1% to 9% or 10%. Maybe for some institutional investors or some kind of treasury management, this can be a good rate of interest. But if retail participation has to come in, then the interest rates has to be higher. Because if they can just buy and hold some token and make good money out of it, or in centralized exchange trading, it can give much more yields than DeFi yields, then they will not be so much attracted towards it. That's why I think like AI infrastructure with very good pattern recognition based trading systems are very much necessary, and that's exactly what we are building. And this will make DeFi much more attractive in terms of delivering higher rate of interest, of course, by taking into consideration the risk management. And this can lead to mass adoption of DeFi, even from retail segment.
Yes. Before we move on to give you, Graham, the spotlight, I wanted to ask you, Guru, do you have another page open? There's an echo. Do you have the live YouTube going on in one of your page? There's an echo again happening in one of us.
No.
No?
No.
Okay.
Sorry.
I hear it like the live coming afterwards. So
I hear too.
Okay. All right. We'll ignore it. Graham, go ahead. You turn to speak.
Yeah, thanks. Yeah, I've also heard it, but I think it's stopped now. So that's good. Well, fundamentally, I just think the whole investment rails is broken, and I feel like we've gone through these phases of DeFi, but also I think it's just left many people out for like mass adoption, and I think there's a couple of ways that this type of investing will go. I think it will be community driven. I think it will become more decentralized. And I know there are two big things just to say, but I think thirdly, real world assets should come into this. And I think that will be a trigger point for exponential growth. So these are all spaces that I've looked at quite extensively. And I feel like that to bridge that gap, we just have to be able to enable investors with tools to allow them to invest easily into, if it is a yield or if it is a certain protocol, that the barrier is just quite easy. So what we're doing, we're just effectively creating like a mini VC vehicle that you can do at the cost of a gas fee, and you can set it up within minutes. And we don't want to leave out that like real world element of how you take equity in companies and things like that. So you can actually convert your DAO into an LLC, for example, and actually bring that memo on chain as well of, hey, look, I've invested into a real equity startup. So I think that's perhaps the way the future is shaping up. And I think we will see that bigger adoption towards real world assets, and quite excited about that.
Just to back up a couple of points that were made there that were really good. You know, what Guru Prasad is saying about needing regulation in this area is spot on. But actually, I think, and following on what Graham is saying, we need the regulators. And I've been beating this drum for nearly 20 years. We need to start thinking in less patrician terms about how the markets are regulated, access to the markets are regulated. Because the thing that's going to happen, and Graham's touched on it just there, is the digitalization of assets is going to lead to the financialization of a whole slew of them, things that we don't even think about being financialized today. And the fact that something is financialized does not turn it into a security. You know, for example, you can have a collection of baseball cards. They've never in the past been considered a security. So why would something in a digitalized context be considered security just because it's tradable? I mean, there's a guy who's actually been working on some of this stuff called Bob Cornish, who was working in Wyoming, and Wyoming are actually pretty advanced in terms of how they're looking at the whole DAO thing, and it's a critical point that Guru Prasad raises there. But he and I actually became friends because he was speaking on a panel, and I asked him the question, what is it about if an asset goes from being a non-security to being digitalized and then financialized, why does that, simply because it's tradable, become a security? And he was the only lawyer I met who gave me a straight answer, and that straight answer was, I have no idea. And this is the thing that we have to get past, because, you know, when we start to consider the size and scale of the economy that we're talking about, I touched on this at the beginning when I came in, and I said, you know, we're excluding the vast majority of the world from actually participating in the economy. I spoke about this the other day. There's a guy I met from the San Francisco Fed who told me they actually looked into what the economic cost was of disenfranchisement of African Americans in the USA. $57 trillion between 1990 and 2020. Forecast to be $173 trillion cost to the economy between 2020 and 2050. Expand that to the world. Start thinking about what this means when everything around us becomes a tradable thing, when our whole asset base can be digitalized and become liquid, tradable. I mean, we talk about the Sage of Omaha. You know, what's the real secret to the performance of Berkshire Hathaway? It's actually a reinsurance company, so it's doubling its returns. Why can't the average person do that? Why is there an assumption that the average person is too stupid to actually understand things that are everyday items? I mean, maybe there's an argument when you talk about securities that are complex instruments, but these are the everyday items that we're all used to. These are not complex instruments. We need to evolve this discussion, and regulators, I think they're looking at the wrong thing, the red herring. They're looking at how to regulate Bitcoin or crypto, and the number go up stuff. Forget it. The number go up stuff. It's very simple. Do you have gambling laws? Yes or no? If yes, regulate them under gambling laws. If you don't have gambling laws, get some. But the rest of it needs a much more intelligent approach, because the stuff we're talking about here actually will transform everybody's lives. And we need to take the handbrakes off, but not necessarily throw the training wheels away, if you'll excuse the extended euphemism.
Yeah, and this is exactly what we're doing, and we're trying to be an inclusion for everyone to be able to join DeFi, and the future of decentralization, the future of investing, it has to be including everyone, right? So that's definitely a good point there. Guru, you want to touch a point on that, or?
No, I think that's right what Greg said. I mean, real world assets have to come on blockchain and they have to get tokenized, and then they can have some value. And I think that's the thing what some of the exchanges started to do quite some time ago, because FTX exchange, when they were still there and doing the business, we could see some Tesla stocks and other kind of things which was tokenized. I think that was to bring, very easily the crypto people also into the mainstream stock kind of like returns, but having the tokens. And there are nice protocol like synthetics, which makes it possible to tokenize any real world assets. I think more and more such kind of assets have to get tokenized, because if I want to buy a stock which is trading on Hong Kong Stock Exchange, I can't just buy it. Or if I just see a very good company like which is in an emerging economy, then I can't just buy it because I am not a citizen of that country, or I don't hold a residence card of that country. So I just can't buy that stock at all. So, but if we tokenize it, I mean, like, I will be not just be able to buy this kind of stocks, whatever I would like to do it, but also it gives a legitimacy for blockchain itself, because it makes it possible for me to do something without which it would be absolutely impossible.
I think we need to be really careful when we talk about synthetics, and understand this. Distributed ledger technology essentially allows us to do one incredible thing, and we should not dress it up, because what it does is awesome. It allows us to trust the message, not the messenger. And anything that restores that requirement for third-party trust, we need to be really careful of, because where you see real-world assets being pulled on-chain, somebody still has to behave as the custodian. Somebody still has to be given that third-party trust. Some of this might come down to what the future of banking and the future of funds, etc., might be. But fundamentally, we need to be very, very careful when we talk about synthetics, because there is still a custodian, and that custodian should be regulated. There should be oversight, because otherwise, FTX is sitting there as a landmine in many, many different directions, where you see anybody, for example, the so-called layer twos. What are they doing? They're batching transactions. They are custodial banks. What are the third-party bridge services that we're seeing being hacked all the time? Actually, they're payment service providers. Under the existing regulation, the existing regulatory frameworks can apply to these things, and they should. If we're going to batch transactions in order to expedite consensus, which is actually the function of the technology in the context of distributed ledgers, then that should be a regulated activity. It shouldn't be something where you go, hey, I'm X and I used to be in the Ethereum Foundation. You can trust me. That's not the game. The game is to trust the message. So, I think Guru Prasad is right in saying that there are many things that we can do, but we ultimately need to be very careful to think that the token is a thing that points at an asset. It isn't the asset itself in most cases.
Yeah, but
this is a good transition to talk about, potential risk and challenges, associated with decentralized finance. Go ahead, Guru.
No, I was just speaking about some of the ideas that I had personally, like if these tokens are really backed with the real shares which is in the stock exchange, and not just trying to mimic the price movement of an asset, but if it's really backed, I mean, the concept of stable coin, if it is done really perfectly, I mean, like backing it up with 1:1 US dollars. So in that case, if a real world asset, let me say a Tesla stock, if it's backed with one token, I mean, someone should really have a Tesla stock to back it up with. So I was speaking something about like real world assets being backed with a token, like not just token mimicking the value.
I think what Greg mentioned about the messenger is such a profound point, because one thing that we're missing is participation and governance. And I think so I do believe that this tokenization of everything will happen, including like electricity bills, all sorts of utilities. I think it is underway. And one thing that is missing with any of that, like if you take a bank, for example, we trust the bank with funds, but we have zero participation. We cannot have any governance. We can't have any voting rights in anything. And that's what we need to lean towards with any type of investing model, rather than synthetics or making parallels of certain things. I think there's space for that, but I think when you are when you're trusting a protocol with funds, or having like an investment club manage a set of things, they need to be able to vote. They need to be able to have a common goal in mind. And I feel like we need to move more towards that. And if you look at the metrics for DAO creation and governance and a lot of events recently, I think we are starting to see exponential growth towards that. And I feel like that's going to be crucial, is that participation point.
Definitely.
I think DAOs are going to be one of the great empowering tools actually in this, because it's something that is going to allow, and I think you hit upon it just now, Greg. We've had investment clubs for how many years? Essentially, that's what a DAO is, but on a bigger scale, and it automates so many of the processes that otherwise become quite costly and draining and time-consuming parts. I think that whole issue, we've said it a few times now, the whole issue of how DAOs are addressed and understood and contextualized has to be really looked at hard and well. And I fear that there's too easy a solution from regulators to say, just call it a security until someone proves it isn't. I think there should be a presumption of innocence rather than a presumption of guilt.
Yeah. We see more and more DAOs coming in the market for a lot of different things. And then there's a governance token, and the more you have it, the more you can vote and have, says in the protocol and whatnot. So what do you guys, where do you guys see those DAOs being used most, and how is interesting for the community, for the people?
Yeah, I think it's going to be widespread. There's not a one just leading indicator. I think we've seen just a lot of general, if you hold this token, then you have access to voting rights and things like that. But now it's being curated into more of collective, that you first of all need sort of an NFT gated membership to access. So that's sort of like one decent layer and one good use case for NFTs as well. So that if you hold that, you have certain voting powers. But I think we're going to see it in all sorts of cases. Like I was reading up even on the Japanese government, and the Japanese government are now, they have a department looking at DAOs, even for like, voting and certain government policies. And it was brought up at the World Economic Forum as well. Like they were actually promoting DAOs. They were not promoting crypto. They didn't even want to use that word, but they were actually promoting the use of DAOs. So I think we will see it in the political space as well, which is very much needed. There's still countries doing paper votes, for example. So I think it will bring a lot of transparency to things. But there's not one super indicator. But I think for investments, I think that's where I see things at. I give a use case to people who are onboarding with Ron, is that you can get 4 friends together, you can have a common goal. You can buy 1 Bitcoin together, or you can invest in, a Web3 startup, within minutes. And that is just super quick, and I feel like that's a good use case that you can have voting within your community quite easy.
Great.
Just adding to this, if you were to go and regulate a bank, a broker, a fund management service, any of these things, one of the biggest things that you're going to have to convince the regulators of is the fact that you've got the governance right, and that the right people are in the right places to do the right supervisory roles, etc. I think one of the challenges that the DAOs need to embrace, and maybe the industry needs to take the lead on, is actually to set out a governance charter. Because one of the big issues we have with DAOs is the abuse of governance, where you find that certain people end up controlling, or groups of people controlling the whole thing. And we've seen this repeatedly, not just with DAOs, but also with layer ones. There are a whole stream of layer ones out there where the governance actually is choking the capacity of this thing to work. I could name 3 or 4 off the top of my head. It's that prevalent. So getting into that governance issue, and actually the industry behaving like the grown-ups that we want to be treated as, that's the key.
For sure.
I think the concept of DAO is really amazing, but there are two things that I would like to mention here. The first thing is about what Greg mentioned, the market abuse, or the abuse of the governance that we saw during the Luna crisis. They passed a resolution, and most of the Luna tokens were with the founders themselves, and they passed it even without hearing any of the voices from their community or their token holders. So this was a very clear abuse, and everybody was saying, like, where these many tokens are even there, who is actually doing it? And secondly, like, when most of the tokens are with is in the wrong hands, then it can take the project in a very negative direction also. Like recently, Uniswap wanted to go on Binance Smart Chain, but it was prevented by 2 very big investors that they have. So they vetoed it, and now that's not going to happen. Because of which, probably Uniswap might suffer a bit, because if it's on another blockchain, like probably, like a lot of people in that community will be joining, and business will be growing, it will be flourishing. But because of certain investors, like who had huge amount of power over the governance, I think like these are the problems that I see in DAO. But it again depends on the tokenomics and who owns it and how they run it. But if these micro things are really very well defined, and if it's been taken care from the beginning, I think DAOs can work perfectly, and it can work better than any other corporations.
Yeah, for sure, I agree. And I always say this, like, just because it's a DAO, it doesn't mean that it can't fall apart. But if it's run well, and the tokenomics or like NFT based DAOs are run well, then I think they have a very good future.
Yeah. Yeah, I think that's a good point, and I think that sort of learning curve with everything in the space, there had to be certain pain points, and that to come out decent building mechanics around this. And I agree with what the guy said. I think a lot of that has to do with vesting schedules also, and I think we've seen that with certain projects. They can be manipulated quite easy by a certain amount of people holding onto those. And some of those other governance protocols, I think they were very, very poorly managed. I wouldn't even call them a traditional DAO in the sense they were just fast tracked to push through certain things. So I think like what I've learned and what we're building towards is that gated community that you can only join with that certain membership. And you could have a link, for example, and you can only privatize that certain club. So it wouldn't allow that participation for like bad actors to come in. And also you don't need a native token. You don't need a native token for a DAO. I think a lot of the early projects had that, and you just have this pool sitting there, but it's not being really managed or utilized that well. So that's just one thing. You can have like a very good DAO system, protected, only open to people who have access to that, and you don't need a token for it.
Just to add to what Graham is saying there, and going back to the adult comment, when we talk to regulators and we say that you need to be slightly less patrician and slightly more liberal in how you approach this, it would really help if, as people who are interested in this area, people who are active in this area, we showed a little bit more discernment, and it, as Graham is indicating, actually looked at the governance of things that we put money into, actually looked at the tokenomics and check, is this just number go up, greater fool fallacy, or is this something that is actually delivering a utility? And does that utility have a value? Might that utility increase in the future, and that thereby drives the increase in the utility token value? So I think we kind of, as a group of people, need to think more carefully about what we're putting our money into and why.
Definitely.
Yeah, discernment is a great word, and I think from what I've learned, and people experience in the space, the likes of Celsius, FTX, it seems like a lot of new people in the space. That's where a lot of people did get burned by being trapped in these. So like discernment is absolutely key, and I think if you are going to join a DAO, it is up to you to do extensive research and see how it functions. Yeah.
So how can we promote greater transparency and accountability for in the investment process for the community? More transparency, like, do you guys have any suggestion, ideas you want to share? Anyone?
Yeah, I can go.
Something else? Go ahead.
I can go. I could just relate to what we're building, because that is one big area that we're looking at. So we initially started building a launch pad for startups and bringing that sort of revenue finance on chain so that people could have visibility into how that startup's growing and helping them with funding in that sense. But then we started to look at the bigger picture of if you are running sort of like an investment vehicle, what does that look like? So we don't need to have your name sprayed out there, but your investment club can be started just by a wallet address, and that admin wallet address to begin with, initially sets up that club, and then you have tools around the governance that you build in. So you can look at an investment club on chain. You can see the wallet address, you can see assets, and I think that's good. I think that brings transparency into this investment club is investing in NFTs or some tokenized projects. And I think that is good. And we also, what you can also do with that is you can even gamify that experience of investing, because the whole paperwork and everything that you go through in the traditional sense is really outdated. It's not efficient. So you can have a lot of transparency through an investment club. And I think from what we've gone through people interested in this and creating those, is that you don't need to have everything on display, but why not have a look into what you're investing in and see the bigger picture in creating that wider adoption towards you becoming your own investor.
Thank you so much for sharing.
The panel before this one, Martin, was focused on DeFi lending. And actually, one of the things I think that DeFi lends itself to is to break down the barriers between all of those points. That actually it can become a much more cohesive environment, much more where you can look at a company and decide which parts of it you'd like to invest in. Like, for example, is this company a very solid operation that's doing a lot of business, but it's not really got a lot of growth? But you know what? It's effectively acting like a bond. So I'll buy some of their debt. I think I go back to the point. We need that discernment. We need to have people be educated. We need to look at, there are so many things. Like I had this, I was very proud of my daughter in a way, and this is slightly heretical. She told me she didn't want to go to university. And I said, well, I can understand that, because, what do you say to a master's in arts? I'd like that at large, please. We're churning out graduates, but we're not actually churning out educated people. And what I mean by educated people is in the true Socratic sense. The whole educational system is driving toward this thing of giving people certification, but it's not necessarily driving toward making them active, capable stakeholders, citizens, etc. We need to, there has to be a deep down transition in all of these things, the future of work, the future of education, the future of how we economically transact with one another, they're all linked. And we need to start educating children in becoming citizens, in becoming stakeholders, in becoming guardians of their own wealth and well-being. It is that basic that we need to get into these things. And so, when Graham is talking about, well, being able to understand and maybe gamifying some elements of it, yeah, that's the industry coming to the individual, but the individual has got to come to the industry too. We need people to be able to be given the basic tools to discern whether something is good information, bad information. We talk about the end of truth and the end of the era that nobody trusts mainstream news and so on. All of these things, fundamentally, again, I make this point to my children: you shouldn't trust any single source of information, including me. Everything
Verify.
you hear and see, yeah, exactly. You should actually be able to go and cross-reference it, and that is a basic life skill that we need to teach everybody from children through to adults today.
Very good point. Love what you said. Guru,
yeah, I mean,
maybe?
sure. I will just add a few more points to what Graham and Greg have already said about, but my point is a little bit on the due diligence side. So due diligence is extremely important on any project, especially when you speak about blockchain project. And then we have to see all the on-chain records to see their credibility and what they have announced and what they have done. This is a really, really very important. So, and another thing which is very important is also social proof, to check their social media, their announcements and their traction and their metrics, and to see like who exactly is following them and why they're following them, what is the connection between them. We do a lot of social analysis because we as a company have built our own sentiment analysis engine to get the sentiments of the market, and we use it for building strategies. That's a different story, but still, when we were building it, we were also trying to think like, if someone says like Bitcoin to the moon, it can be a positive statement or it can be just a sarcastic statement also when Bitcoin is falling down. But we have to see like in the previous occurrences, like how many times this word was used by this person and what was the effect on the market based on it, and how credible was that. So these kind of things is very, very important. I mean, even when we do due diligence, like social proof is important and tech proof is important, and metrics, that's what everything is about. I mean, if they are able to achieve big things with a very small thing that they have currently, small in number, the small team, or just small amount of money but making very big amount of output out of it, these are the key metrics that we cannot really reject.
Yeah,
I'd like to just add something to both what the guys are saying here, and it's this: everything we've talked about here is a tool, and in the context of a world in which we can trust the message, not the messenger, that Web3 to me is very simple. Web2 is free at the point of use because you're the product. Web3, you pay for your utility where you find it because actually you own your own data, your own world. But if we were to take this a little bit further, what the industry serving that this growing, forthcoming, nascent economy it needs to think about is that we are tools. We're not necessarily giving answers. What Guru just gave there is a really good example of a fantastic tool that somebody can take, use, pay for, and get an outcome from that they can understand. And we just need, as an industry, to be very careful that we don't reposition ourselves into a state where it's, trust me, I'm X.
Definitely. So we're coming down to the end. And Greg, while you're on the spotlight, do you have any closing thoughts for the panel?
I think that kind of summarizes my closing thoughts.
Yeah, I did.
I opened with saying this is about trust the message, not the messenger. And I would close by saying that as an industry, we need to think about providing people with tools. And that's where we stop.
Perfect. Thank you. Graham, how about you go?
Yeah. I mean, to touch on building tools to enable better insight on everything, and I think what Greg touched on about the education side of things is so key. And I feel like there's one point I want to make in terms of like people making investment choices too. Like, we're seeing a big push now towards AI, for example, and Web3 is kind of like, oh, you need to take a backseat and things like that. So I think just giving more power to the everyday investor and creating that equal playing field so that that barrier is so low. And if that price of a gas fee to create one of these vehicles is 20 cents or a few dollars, I think that's like super important. And it's super important that people collect and form ideas together, and those analysis and investment choices become a lot easier for everyone to get on board. Why can't we all invest in like the next startup or the next technology wave of tomorrow? And I think I'd like to see more of that to enable, like what Greg said, to enable that messenger and to enable a more easy flow to everything. That's just what I would like to end with.
Or easy onboarding. Yeah.
Yeah, exactly.
What I would like to say is that this industry is still growing. I mean, like overall 2%, 3% of the whole population is still in crypto. There is too much of growth to happen here, and it will keep happening. And one should not worry about the pumps or dumps or any kind of other kind of things that's happening in the market, but they should just focus on building the things to welcome the next billion people into Web3 space, into crypto space. And if Bitcoin was not just a financial asset, if it was just purely non-financial blockchain thing, probably we would not have, come to this point where we are now because of that financial aspect. A lot of people came into that, whether through speculation or investments or whatever it is. And that's why investing or trading cannot be, like seen down. I mean, this industry has to grow because this brings a lot of people into this space. And when they come into this space, they will try to explore other things also, like NFTs and other technologies to implement it. But without having any kind of monetary benefits, I don't think people will come. It's like play to earn. And it's not for play. The earning part is what brings people to the play to earn space. So that's why we need to build a lot of infrastructure around bringing the people first, and then making them to think what they can do further than just trading and making money.
Yeah, absolutely. Maybe it should be play and earn. But thank you so much for sharing this wonderful thoughts, guys. I really appreciate it. I want to thank Laurent and the team for putting this beautiful summit. It's been a lot of work. So just want to thank everyone, and let's keep building together. And I will see you next time. Thank you so much. Bye-bye, guys.
Thanks,
Thank you, Martin. Thanks.
Bye-bye.
Bye-bye.
Thanks, everybody. Take care.
Thanks, everyone. Bye-bye.